What's up everyone, and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. What's up everyone, and welcome back to Jayconomics. Today we're going to go over a new stock that is thriving in a $35 billion industry. I'm really excited to be bringing this company to you today as it has a lot of growth ahead, is listed on the TSX, the major Canadian exchange, and is considered a strong buy by analysts who have price targets double what the price is at now. Before we get into it though, here's a quick word on BlockFi, a platform that you can use to maximize your returns on your capital using crypto. Earn money while you sleep with BlockFi. Earn up to 8.6% APY with a BlockFi interest account when you use stablecoins like USD Coin or Tether, which track the US dollar, or up to 6% APY on Bitcoin. If you use my URL blockfi.com/jayconomics, you'll get up to a $250 crypto bonus with a deposit of $25 or more in crypto. The link is in the description if you want to try out BlockFi today. So the company that I'm bringing to you today is Eyecare, ticker symbol KITS on the TSX, Toronto Stock Exchange, and ticker KTYCF on the OTC markets. And what these guys do is that they specialize in digital eye care in the US and in Canada. KITS offers vision testing, prescription renewals, contact lenses, eyeglasses, virtual try-on, and more through their network of websites. Over the past year, many businesses have struggled to stay afloat, but KITS was not one of them. With many people unable to visit their optometrist or retail stores for eyewear, KITS was prepared to capture that market share. Sitting at $8.25 Canadian and $6.54 USD as of the time of this recording, long ways away from Analyst Price Targets, which we will get into a bit later. So this one is worth looking into. Today we're going to break down KITS' business, upcoming potential catalysts, the Analyst Price Targets as I mentioned, the positives of the stock, and of course also break down possible risks for the business and this investment. The volume is extremely low on this one too, meaning that this one just needs eyes. Pun intended, yes, bad joke. But seriously, I am excited to be partnering up with KITS, and thank you to them for making this video possible. Now let's jump right into it. Alright, so let's start with share structure, and I hope you were paying attention to my video from last week about share structure, because we are jumping right back into it. So the first thing you will notice is the incredible amount of insider ownership with KITS, with the insiders holding more than 70% of the 31 million shares outstanding. That leaves the public float at just 9 million shares. So once this stock gets moving, good luck stopping it. This will also be extremely beneficial for the company moving forward, as it gives them a lot of flexibility when they will need to raise capital. Now, if you do want more of a breakdown on share structure and what everything means, please do go watch that video released last week. One more thing I'd like to point out here is that Roger Hardy, the CEO and founder, has really put his money where his mouth is, as he owns over 9 million of KITS shares, which represents 29% of all the shares. Now, this guy, Roger Hardy, has experience in the eye care business as the founder of Coastal Contacts. Hardy is well respected in the business world and has received the Ernst & Young Entrepreneur of the Year award twice. KITS has put up some very impressive numbers in the early stages of their business. KITS has an active customer base of 600,000, with repeat customers accounting for 69% of revenue. Even more impressive is 35% of revenue is from customers who have made more than 5 purchases from KITS. They did $72 million in revenue in 2020, and analysts expect them to eclipse $100 million in 2021 and $200 million by 2023. Now here, if you go on the Kits website, you see that you get your first pair of eyeglasses for free. Yes, for free. Now, here it says, what's the catch? Simply put, there isn't one. At Kits, we're so confident you'll be blown away and become a customer for life. We're betting and giving away our livelihood on it. So clearly they're very confident about their product, and clearly that has been merited. Possibly the most important thing for Kits is their increased production of glasses. Currently, they are producing 2,000 per day and are in the process of scaling to 10,000 per day in 2021. This is extremely important because the margin for glasses is nearly double compared to contacts. In addition, Kits puts a big focus on customer retention, and to increase retention even further than it already is, they are introducing auto shipping to their online platform. Auto ship will enhance conveniency for customers and provide excellent visibility into their future revenues. Kits already has 2 analysts covering them from Roth Capital Partners and Canaccord Genuity Capital Markets. Both analysts labeled Kits a strong buy, with Roth Capital putting their price target at $13 and Canaccord's price target is at $17. So average price target of $15 between 2 analysts. One analyst mentions that these numbers could be quite conservative depending on a few upcoming catalysts that Kits can potentially take advantage of. First is the fragmented eyewear market. So it's estimated that 50% of the eyewear market in the US and Canada is controlled by independent retailers. Unfortunately for those retailers, this is a new age where e-commerce businesses who provide the simplest experience will always win out. Then we have the online vision test. Now, Kits has developed a proprietary vision test they believe will increase the company's e-commerce total addressable market. Currently, customers must have an existing prescription that will be updated through the company's online vision exam. If people have the option of having an exam in person versus online, well, guess what? They're choosing online every time. And that brings us right to the aging population and their increasing need for eyewear. Over time, 75% of the North American population will need some form of vision correction. With the older population's hesitancy to go in public now, online vision tests offer them a solution right from the comfort of their home. But possibly the most important thing for Kits is their increased production of glasses, as we spoke about earlier, going from 2,000 per day to 10,000 per day. As we mentioned earlier, this is because the margin for glasses is nearly double compared to contacts. Now, as with any investment, it is always important to look at potential risks. The eye care industry is an extremely competitive business with customers having a wide range of options. Kits will be depending on their high quality, great value, and convenience to capture new and repeat customers. Now, Kits has great relationships with their suppliers for private label and third-party products. However, if the relationship with any of their suppliers weakens, well, guess what? That would bring significant challenges to them. And then there's management departures, and management departures would be a very big deal here since management owns over 70% of Kits' outstanding shares. That being said, having 70% ownership in the company directly aligns management and shareholders' interest. Taking everything into consideration, I believe that Kits has a great opportunity for growth moving forward. They are well capitalized after their recent IPO and should be able to grow sustainably while generating healthy levels of operating profit during expansion. They also have a fantastic management team led by Roger Hardy, who has a great track record in the eyewear industry. With Kits currently trading at just over $8 Canadian, a low public float, and fantastic analyst price targets far from current price, I believe that Kits is one that you're going to want to put on your radar and do your DD on. So that wraps it up for today's episode. I hope you guys enjoyed the video and that it gave you a good insight into why Kits Eyecare could be a very interesting play this year. And guys, if this video brought you some value, then please hit that like button for me, as it really does help the channel a lot. And if you want more content like this, then don't forget to subscribe and turn on that notification bell to be notified when any new video comes out. And of course, check out the Patreon if you want access to all of the perks, like our awesome Discord and access to my stock master list. This document tracks my entire YouTube and Patreon performance and is basically just a way to be fully transparent with you. Speaking of which, the master list also reveals which stocks I've bought and sold, which ones I'm currently holding, and how much money I currently have invested in each stock that I do hold. On top of all of this, you'll get access to all of my new stocks and new plays and new trades in a timely fashion, and much, much more. And until next time, take care and invest smart.